Coming up on market shares, the Federal Trade Commission blocking the merger of two supermarket giants, how it could affect your grocery bill.
And Macy's announces 150 store closures as layoffs continue across all sectors.
And the market's just closing, but they're mixed to kick off March. One major index hitting a new high yesterday. We'll tell you which one. Hold on to your wallets because market share starts right now. Good afternoon and welcome into Market Shares. I'm Bradley Hoppenstein.
And I'm Peyton Spellacy. Let's get right to our top story, Bradley.
Yeah, actually a pretty busy week for business news. This breaking just this morning, Elon Musk is suing ChatGPT maker OpenAI and its CEO Sam Altman for what he says is a breach of contract. Musk claims OpenAI is putting profit over its original mission to help people with new technology.
Musk was a co-founder of OpenAI in 2015. At the time, the company was originally in the game to develop AI to benefit humanity, but its nonprofit structure split to create a separate for-profit arm that handles revenue-generating ventures like its Microsoft partnership. In the filing this morning, Musk's lawyers say, quote, OpenAI Incorporated has been transformed into a closed-source de facto subsidiary of the largest technology company in the world, Microsoft. Under its new board, it is not just developing, but it is actually refining its AGI to maximize profits for Microsoft rather than for the benefit of humanity.
Yeah, the suit claims OpenAI breached its founding contract and the company owes Musk millions in wrongful donations, and Musk is seeking both payment and OpenAI to return to its original mission. Peyton, there's two ways you could look at this, right? The first is, okay, Musk was an original investor. He's not happy with where the company went. But the second is, Musk also has his own AI startup. So you got to ask, what's the real motivation here? Because OpenAI is way ahead of their competitors.
I also find it's interesting that they say, specifically, it's to not benefit humanity. So.
Right. All right, let's move on. We're going to go to media now. Warner Bros. Is no longer pursuing a merger with Paramount as its shares trade near a 52-week low. Warner Bros. Shares fell 10% a week ago after the company missed targets for both earnings and revenue. Now, the stock has also fallen almost 50% over the past year. Now, Comcast says they're not interested in acquiring Paramount, but they've been working with bankers to explore some kind of potential partnership. One of those outcomes could include bundling streaming services Peacock and Paramount Plus.
Now, Paramount Global has missed revenue expectations for the fourth quarter, but has posted a surprise quarterly profit. Paramount, home to brands such as CBS, Showtime, and Nickelodeon, reported a 6% revenue decline, but had notable strides due to its streaming platform, Paramount Plus. The streaming service reached over 67 million subscribers and recorded almost 70% revenue growth. The company says it expects to achieve profitability for Paramount Plus by 2025.
And Peyton, just going back to talking about that bundle, Paramount Plus and Peacock seem to be at the bottom of kind of the streaming service sector. What do you think about that? Are you a Paramount Plus or a Peacock?
Well, you know me. I'm a Peacock person for sure. I like my Bravo, my reality shows, my Office, so I'm pretty much always picking Peacock.
It's very interesting. We've needed some consolidation in that sector for a while, so maybe that bundle, maybe Paramount trying to figure things out could be the answer. We will continue to follow that story. Let's go to retail now. TJX Companies, which owns TJ Maxx, HomeGoods, Sierra, and Marshalls, is getting some rare spotlight after some surprise growth in their latest earnings report. Inflation and deal-hungry shoppers propelled the low-cost retailers to a 13% jump in sales over the holiday quarter. TJX Companies, squeaking by earnings expectations, close to $1.5 billion, now has its stock over 7%, up over 7% this year. The question is, can the company sustain this growth as more competition and lower prices slowly come back? A lot of that growth is going to depend on if the company brings in new customers at its stores or if it relies on returning customers picked up this past year. You can see shares down to end the week, but TJX sitting at about $100 a share right now, just under its 52-week high at 103. So if things keep trending in this direction of growth, though, that next earnings report is where we may see it grab a little more market cap. We'll keep you posted.
And another story we're always following, Bitcoin. Bitcoin has hit a 2-year high as it surged above the 60,000 mark. Why? exchange-traded funds. The funds, which launched last month, have seen their trading volume surge this week as the cryptocurrency continues to climb. The highly active market around these funds is likely a sign that retail traders are using the ETFs to participate in this Bitcoin rally. The trading volume is even more impressive when considering the price. Bitcoin has risen about 30% since the ETFs were approved, and the tracking funds have all increased in price since.
All right, a big change announced this morning coming as the Biden administration wrestles with how to best protect abortion rights. CVS and Walgreens will start selling the abortion pill mifepristone this month in pharmacy locations that it is legal to do so. CVS will begin filling prescriptions for this commonly used pill in Massachusetts and Rhode Island in the coming weeks. The company said that they'll expand to additional states, quote, where allowed by law on a rolling basis. Walgreens also expects to start selling the pill within the next week. The CDC says medication abortion is the most common method of terminating pregnancy in the U.S.
The Federal Reserve says that key inflation is in line with expectations in January. The PCE price index, excluding food and energy costs, rose 0.4% for the month and nearly 3% from a year ago. January's price rise reflects an ongoing shift to service over goods in a post-pandemic economy. Now, Wall Street reacted little to this news, with the stock market futures up slightly while the Treasury yields are slightly lower. Officials say that they expect to begin reversing interest rates at some point this year.
All right, Peyton, let's talk food. Not a very common topic on this show, but a pivotal moment for the weight loss industry. Oprah's stock portfolio, of all things, is actually getting a little lighter. After revealing late last year she's on weight loss meds herself, Oprah Winfrey is leaving the Weight Watchers board and selling her stake in the company. Oprah joined the board in 2015 and will leave her post in May. Shares losing as much as 25% after the announcement. Incredible, the Oprah effect. You're supposed to still diet and exercise if you're on one of those weight loss drugs, so there's room for Weight Watchers to stay relevant, but the market isn't necessarily sold on them over the competition. Weight Watchers actually bought weight loss drug company Sequence last year to try to get ahead of the game, but with mounting debt 5 times its valuation and the industry shifting toward those pharmaceutical solutions, this is a story we're just going to have to continue to follow.
Now, Bradley, despite all these lawsuits, there is some good news for companies trying to merge. Major League Pickleball and their Professional Pickleball Association have completed their long-awaited merger agreement. The deal will unite the 2 largest pickleball organizations, but both companies will retain their own distinct brands. The merger will bring together more than 150 professional players. As part of the deal, many players have signed multi-year contracts. Combined payouts under these unified organizations are expected to increase nearly 250% this year.
And let's go to tech now. In a stunner this week, Apple is reportedly canceling its over-decade-long quest to build a car. Apple made the announcement in an internal memo to the over 2,000 employees working on the project, telling those employees they'll be shifted to the company's artificial intelligence division. The multi-billion-dollar effort had problems from the start. Apple changed the team's leadership and strategy several times. Now, with the company still years away from actually bringing a car to production, self-driving still a major challenge, and industry trends moving toward AI, Apple decided it was time to do away with the project. A cooling EV market and those shifts toward AI almost certainly played a role here. Apple putting a lot of their resources into generative AI that they're supposed to announce sometime this summer.
And a new warning for Boeing. The FAA is giving the troublesome airline manufacturers 90 days to come up with a plan to fix its quality control and safety issues. The agency says it met with Boeing's CEO on Tuesday after a year-long probe found its disconnect between executives and employees on safety. That report also said some employees don't speak up on safety issues because they're scared it will hurt their chances at promotions in the company. The FAA says Boeing needs to address weaknesses in its safety management system and come up with a plan to measure a, quote, measurable shift in manufacturing quality control. Now turning to the election, the 2024 election, some bad news for President Biden. The Wall Street Journal is out with this headline. It's been 30 years since food ate up this much of your income. With us now to discuss how his White House hopes to turn around that trend is our political analyst, Luke Radel. Luke?
Good evening, Peyton. We've reported on this show about how the stock market is on the rise, but many voters just aren't feeling that great about the state of our economy, which is often due to increased costs for everyday items. And one place where people notice that the most is at the grocery store, when those checkout totals seem way higher than they were even just a few years ago. Take a look at this. A TikTok user posted a few months ago, providing that all these items seen in the famous movie Home Alone from the 1990s in Kevin McAllister's cart, and the price differential between what was done then and now is shocking. According to the Washington Post, grocery prices have jumped by 25% over the past 4 years, outpacing overall inflation of 19% during that same period. And according to a Yahoo Finance Ipsos poll, about 2/3 of voters say that the inflation of food costs is what has hit them the hardest in this economy. So why is this happening? Well, a wide variety of factors are at play here, from labor shortages to climate change, supply chain issues, and even the avian flu. None of these concerns obviously have simple fixes, unless you're talking to the CEO of Kellogg's cereal, as CNBC did last week.
The cereal category has always been quite affordable, and it tends to be a great destination when consumers are under pressure. So some of the things that we're doing is first messaging. We got to reach the consumer where they are. So we're advertising about cereal for dinner. If you think about the cost of cereal for a family versus what they might otherwise do, that's going to be much more affordable.
Interesting how we've evolved from Marie Antoinette's let them eat cake to this guy's let them eat cereal. That is certainly an idea, but instead of asking all Americans to eat cereal for dinner, Biden and his White House have asked grocery chains to lower their prices to reflect their elevated profit margins since the aftermath of the pandemic. An analysis by his Council of Economic Advisors found that while profit margins have fallen back to normal levels for clothing and sporting goods stores, grocery chains remain at record highs.
Now, Luke, I've noticed that the price of some food items remains the same, but the amount of food that you get is way smaller. And people online have come up with a new term for that, correct?
Indeed, Peyton, they have. It's called shrinkflation, and it's something that the president has fought head-on, including in this video clip posted to Twitter from Super Bowl Sunday.
When buying snacks for the game, you might have noticed one thing. Sports drinks bottles are smaller. A bag of chips has fewer chips, but they're still charging you just as much. And as an ice cream lover, what makes me the most angry is that ice cream cartons have actually shrunk in size, but not in price. I've had enough of what they call shrinkflation. It's a ripoff. Some companies are trying to pull a fast one by shrinking the products little by little and hoping you won't notice. Give me a break. The American public is tired of being played for suckers. I'm calling on companies to put a stop to this.
So, Peyton, that is a very interesting video, don't you think?
Yeah, definitely. I was going to say, we are noticing that for sure, President Biden. But is there anything he can do besides calling on these grocery stores to lower these prices?
Yeah, there's very little that he can do substantively as President of the United States. He's not in charge of these grocery store chains, but there is an independent agency that regulates them. The Federal Trade Commission has been helping him out in recent days, including this week when they blocked the merger of the #1 and #2 supermarket chains in the U.S., Kroger and Albertsons. I'm going to send it back over to you.
All right, Luke, thank you so much. Always a pleasure to have you on. He never fails to make me laugh, this guy. I love it. After the break, we have your market update and your market movers. Stay with us. All right, welcome back to Market Shares. We're about 14 minutes past the hour. We're going to pull up our market update for you. Today's the 1st of March. Market's kind of mixed on the first day of the month. The NASDAQ finishing the week up about 266 points. S&P about 42 points up on the week. And the Dow, on that inflation news that we got yesterday, taking a bit of a dive today. The NASDAQ, I want to note, notched a record close on Thursday. Its best close. First record in over 2 years. First time we've seen a new record on the NASDAQ since 2021, Peyton.
Yeah, I was going to say that the Fed chairman actually said that they won't raise those interest rates as much as people think. But so I think the stock is a little too high. It's a little above where it should be, in my opinion. If you think the tech sector does better with a low interest rate just because they spend so much. So that's why I think that NASDAQ is up pretty high right now, high since 2021, like you said. But I think it's a little bit above where it should be, in my opinion.
Yeah, and it's also interesting, you know, we're talk about a lot of heat going on in the tech sector with Elon Musk suing OpenAI that came out this morning, and a lot of pressure on these AI companies to keep churning out new products and technologies faster and faster. So we're going to have to see how all those AI implications impact the indexes. All right, let's get to our market movers now. We're going to start things off here with AMD. So AMD, just staying in kind of the tech game here. AMD, Advanced Micro Devices, up about 12% to start the day, and then slipping to about only up about 4% on the week. And here's the thing: is like we just mentioned, all around the markets just have a surging interest in artificial intelligence. And AMD not necessarily even doing much themselves this week. I mean, their demand is up just all around for chips, but the demand across the entire sector is heating up, not just AMD. Now, I'm putting them up because you could see that spike today. I'm putting them up to show the impact NVIDIA is having across the board. NVIDIA up almost 70% on the year, but you can see how them kind of leading this AI chip game is influencing other companies and influencing their stocks. NVIDIA up about 70% on the year, but AMD, let's not discredit them. They're up about 50% on the year.
Now, Brad, let's talk about an industry we don't get to talk about much: travel. We're talking about Norwegian Cruise Lines. Yeah, so 2021's we're talking about a lot. This was their first profitable year since 2021. 3 years since they have been profitable, which is crazy to me. So they beat revenue, and their guidance is looking strong because more people are booking. People are just having more money to spend, so they're going on cruises. So I think that's pretty interesting for the cruise industry. I've seen a lot of it on social media. It's kind of becoming trendy right now. So it's good to take a look at what they're doing in the stocks.
Yeah, Norwegian up almost 20% on the week. And like you mentioned, you know, it's kind of that post-pandemic resurgence of the travel industry. First profitable year since 2019. I mean, that tells you the whole story right there. Pandemic hits in 2020. Now they're finally bringing things back, and it looks like things are actually looking up for Norwegian and kind of the whole travel industry as a whole. Let's quickly get to Moderna on the week here. Now, not too much necessarily going on with Moderna themselves. But they're up on the week, but they've kind of been falling a lot over the past month. And the bottom line is demand for those COVID vaccines continues to decline. And the CDC actually making an announcement today that COVID is essentially done. They're eliminating that 5-day quarantine if you have any symptoms, or unless you have any symptoms. So COVID on its way out, and Moderna versus their competitor, main competitor, Pfizer, they don't have too many consumer products in the medical field.
And something interesting on the other side of that, one Wall Street analyst today said that he's expecting 33% upside, so that they'll be up by the end of the year. So they had a good day today, and they're expecting to have more.
It's one we're going to have to continue to follow.
For sure. Syracuse University has announced the construction of 2 new residence halls. How that will impact students' pay right after the break.
My house. Lately, not my happy place. Everybody's pretty tired of each other. The parents were not themselves. My little brothers were morphing into small creatures. The walls were closing in. Clearly a case of too much family, too close, 24/7. And there's a lot of that going around right now. If this sounds like your house, try going someplace new. YourLifeYourVoice.org. You'll find lots of ideas to help you handle the family stresses of being confined to close quarters. YourLifeYourVoice.org. It might not get you out of the house, but it could help you find a little more breathing room. Everybody has a dream. Mine was to see the ocean. And with a little help, I made it.
Welcome back. As part of a continuing project to increase student housing near main campus, Syracuse has announced plans to build 2 new dorms, Peyton.
One of these facilities will be a 450-room dorm to be built on Ostrom Avenue across from Thorndon Park. Construction on this project is expected to begin later this year. Now, with more on how these dorms will impact students' pockets is our market shares analyst, Michael Lamorte.
Yeah, thanks, guys. Earlier this week, SU announced its vision plan to upgrade and construct dormitories across North Campus, and that's part of the university's project to improve student life and experiences. Now, this is the first time the university is getting a new dorm since 2015, when Ernie Davis opened to the public. To put things into perspective for how long ago that was, Bruno Mars's Uptown Funk was #1 on the Billboard Hot 100, with Thinking Out Loud by Ed Sheeran, See You Again by Charlie Puth, and my personal favorite, Trap Queen by Fetty Wap, not trailing too far behind. And for my crypto fans, that's when Bitcoin cost a whopping $500. At that time, the only coins I knew were the ones you put in a Chuck E. Cheese slot machine. The point is, the last time the university saw new housing was years ago. And Chancellor Kent Severud recognized this need for change, saying in a statement, quote, "Many of these residence halls on campus have remained largely the same for too long. Today's students have dramatically different wants and needs for student housing, and this ambitious plan will provide our students with the living environments they expect that will allow them to succeed and thrive." The vision plan dove deep into research and student experiences, both demonstrating that students are more successful academically if their overall experience is rich and diverse. And SU seems to be confident in their announcement. As we mentioned earlier, a new dorm will be built on Ostrom, and additionally, Marion and Kimmel, those dorms located on Comstock, will both be demolished for a new building. But SU has not yet announced the sizes for that facilities. The announcement comes not too long ago after SU released its plans to convert the market-based apartments known as the Marshall and the Sheridan Hotel into student living facilities. So a lot of improvements are coming to SU for student living next year, and it seems like the goal here is to create more living space on North Campus for first and second year students and drive them out of South Campus. And while that idea may sound great, right, having students closer to where their classes are, this may come as a financial shock to some students, like the rising sophomores who plan to move to South Campus next year to save money on dining by using that CUSE cash or other alternatives for food and beverages. Now, the university recognized this, saying in that same statement, quote, "The campus framework originally proposed relocating South Campus housing all to main campus. Today, students have expressed their desire to keep South Campus as a housing option. Still, with the creation of new dorms, SU is driving second-year students out of South even so. And on that North Campus, which often will force students to pick up a new dining plan, and those plans, guys, they're not cheap. The most expensive plan, which is the Orange Unlimited Dining, it's over $7,600 a year. And the cheapest plan, that's the Value Dining Dollars plan, that cost about $1,000 a year. So this coming fall, those rising sophomores, they're going to have to think extra carefully when it comes to dining plans and living situations on North Campus with these new facilities. But SU is reminding students about its financial literacy events, and if you feel like you are interested, you can contact Syracuse University Career Services for more information. In the meantime, I'll be sure to monitor any dining or dormitory changes on my Twitter at Mike Lamorte TV. Bradley and Peyton, back to you.
The Lamorte Report, we love it. Thank you so much. I love having you on the show. Now, the retailer Macy's announced on Tuesday that it will be closing 150 underperforming stores. Macy's had a losing fourth quarter and declining sales, leading them to upgrade their remaining stores and also putting more money into their chains in Bloomingdale's and Bluemercury. Here to break down more of that on Macy's closings is our market shares analyst, Peter Berry. Peter?
Peyton and Bradley, Macy's may be best known for its sponsorship of the annual Thanksgiving Day Parade in New York City. Yet, a Macy's store can be found in just about every state. There will be less of them by 2026. Now that Macy's has announced it will close more than 150 stores nationwide. That's about 30% of their stores. This will leave the retailer with 350 outlets left. That is half the number of Macy's stores which were open before the pandemic. 50 of the stores will be closing by the end of this year in 2024. The other 100 will close by the end of 2026. But back in January, Macy's said it planned to shut down 5 of its Macy's outlets and cut over 2,300 jobs as shopping trends moved online and away from in-person clothing purchases. The layoffs were equal to about 3.5% of its total workforce. Macy's also owns Bloomingdale's, another retail outlet, and Bluemercury, a chain offering beauty products and spas. The news for Bloomingdale's and Bluemercury was better than it was for Macy's itself. Macy's said it will be opening at least 15 more Bloomingdale's stores and 30 more Bluemercury outlets. Analysts who track Macy's said Bloomingdale's and Bluemercury draw wealthier customers, so they want to offer them more options here. Macy's said this in the response to their closing stores, but overall, they'll have to put a lot of these stores up for sale, and it's going to be a valuable land for landowners to buy. Peyton and Radley, back to you. All right, Peter, thank you so much. Retail sales, it continues to be a tough scene in the retail space. After the break, if you don't have spring break plans yet, East Tennessee might be an option. We'll tell you why. It's really sweet.
I see you mobbing over her. Let's go. Let's mob. Let's crawl. Let's crawl. Let's crawl. Hey, yo, we mobbing. Come on, girl. Let's crawl. Hey, yo, let's crawl. Hey, yo, let's crawl. Hey, let's crawl. Hey, yo, let's crawl.
Welcome back. The latest one-of-a-kind stay that puts breakfast in bed and breakfast.
The popular frozen waffle brand Eggo has unveiled the Eggo House of Pancakes, a home that has received a makeover both inside and out to make it appear as a stack of pancakes.
Yes, Peyton, the Eggo home, like you said, which is being listed on the vacation rental platform Home to Go, features a chimney shaped like a stick of butter and other breakfast-themed decor. But that's all the time we have for you today on Market Shares. Hope you have a great weekend. I'm Bradley Hoppenstein.
And I'm Peyton Spellacy. Have a great Friday, Syracuse.